Hello, everyone. This is EnerCom's Oil and Gas podcast number 2. And I am Glen Parrott, and with me is my co-host, Aaron Vandeford. Mr. Vandeford, good morning.
Good morning.
Thanks for being here. Thank you for listening, everyone. As we mentioned in our last or initial podcast, as we roll this forward, we're thinking that we can talk about things that are timely and topical to the oil and gas industry and what we're seeing and what we're thinking. And then hopefully have get some interviews lined up. We'll do that, but talk about things that at least we're seeing in the marketplace that we wanted to mention and go over. And thematically, this week we're looking at sort of the state of capital. But before we get into that, timely and topical, sort of, I would say news of the week, but it's really been more like the news of the past couple weeks.
But it's only been a couple weeks. It's pretty quick.
So, and particularly here in Colorado, where EnerCom is based, for those of you who don't know, we're out of Denver, Colorado, and news in Denver in the oil and gas world is this Colorado Senate Bill 181, which has come along and gone through at lightning speed, really, through the legislature. And again, for those of you who don't know, Senate Bill 181 locally, the goal on that one is to change the mission of the Colorado Oil and Gas Conservation Commission from fostering the oil and gas industry to regulating it to protect public health and the environment. Overall, that's at a very broad level, but in short, what it really does is it is giving more local control to the communities versus state control. The bill is, I guess it's nominally being known as the Boulder Bill, being driven out of Boulder. Certainly has their goals around it, and the oil and gas industry, of course, is leery about it. The fear being it was going to dramatically slow new drilling over time, significantly shrink the industry, and therefore the economic base, et cetera.
Yeah, and I think, the red flag that I think I hear the most from the oil and gas community is that, we haven't been involved in this process as it's moving through, and our voice isn't being considered. And so not being a part of that process, I think, we came out of the election cycle in November, and I think the industry wanted to have that dialogue and move that forward. And this seems to be a very fast-paced, one-sided push through.
Yeah, some would say it's very one-sided, certainly. And that's just it, is because Proposition 112 that came along back in November was defeated 55 to 45. And then, within a couple of months time frame, this is obviously a way to circumvent that election result, or a way to, I guess, influence potentially would be another way of thinking about it. And it's not, in my mind, a matter of, at this point, if it gets signed into law. I think it's just a matter of when. So coming out of, I guess, Weld County, I was kind of taking a look at Weld County, the commission chairwoman, Barbara Kirkmeyer, and chairman, Mike Freeman. They were kind of making commentary the other day around, and Mike Freeman in particular was saying, look, you're giving local control to counties that are opposed to oil and gas, but what you're not doing is you're not giving local control to counties that support oil and gas. And their concern certainly is that when you take a look at the finance and the administration in Weld County, the results from their estimation is that it would mean a 9% reduction in overall revenue. And that's, they're very real economic fears for them, and they feel like they're not getting an active or a willing hearing from the governor or from or from the state. So, so in any event, on the heels of that, I guess yesterday's news, or excuse me, not yesterday. At this point, it was on Wednesday on 3/20, so first day of spring. Adams County, the commissioners passed a temporary moratorium on oil and gas permits. So it's a 6-month moratorium on oil and gas permits. And what's amazing about this to me is that it was really done. The commissioners put out just only a 24-hour notice, and they said, "Hey, we're going to hold this meeting, right?" And everybody in that room, I guess over 90% of the people in that room were like, "We don't want you to pass this moratorium. Why are you doing this?" And so they politely listened, the 5 commissioners, and passed it 5-0, moratorium on oil and gas on new permitting in well counting. So, I guess, my take is that, the uncertainty around 181, which hasn't even cleared the State House yet, is basically spilled over and led to its first moratorium in the state, which I have troubles understanding or seeing the benefits or why this was even done.
Yeah, I think it's really interesting. I mean, this same group ahead of 112, I believe, gave that same minimum 24-hour notice and went through that process. But this time they got questioned on it and said, "Hey, this doesn't feel right." And they said, "Well, it's the only time that we could all get together. It just happened to be tomorrow."
Someone's on the fit
So
in everyone's schedule.
Everyone's got a busy schedule apparently over there.
They're busy guys. So that's the latest and greatest that's going on here in Colorado, oil and gas. And so, not to dwell on it too much, but timely and topical, there you are. More to come. To be honest, we were going to be giving sort of periodic updates on this, but the period has been shortened fairly dramatically. So
yeah, I think we've seen a lot of change very quickly, but I think ultimately we're going to see this play out probably over 6 months, a year, 2 years, as it gets, the lawyers get involved and we really understand what implications this is actually going to have. Because my understanding is that a lot of the way that this is written is fairly loose and open, and has a lot of room for interpretation.
yeah.
And so. Yeah,
and okay, so in fairness, their budget, I mentioned the budget before, and shouldn't see too much of an immediate impact, in that, their oil and gas production revenue is 2 years in arrears. So, yes, to your point, I think that you're going to see a lot of legal maneuvering coming forward out of this.
Yeah, I think some of the other interesting things that are going to come down the pike from this is, where does this get picked up in other places outside of Colorado? Are there other states or other governing bodies that are going to look to this as a model to either not do or to implement in other areas?
Well, I would submit to you, yes. I mean, there's the I don't want to say conspiracy theorists around there. That's really not it. However, I think it's generally regarded that Colorado is number one activity in the DJ, and that's going to the first domino. Next would be New Mexico. I mean, ultimately, if you're really gunning towards the Permian, you start in Colorado and see what progress you make.
Mm-hmm.
So, anyway, moving along. So I guess what else? This was about 2 weeks ago. It came on out, and just wanted to touch base on it because I find it interesting, and that's Haynes and Boone. They released their borrowing-based redetermination survey results. So. Just so everyone knows, I mean, Haynes and Boone, EnerCom's worked with Haynes and Boone for, 10 years now. They've been a sponsor of our conference events, but their energy group has really got some interesting stuff that comes on now. That twice a year they do this, and their energy group polls oil and gas producers, oilfield service companies, energy lenders, private equity firms, and other sort of participants in the industry, to really get their predictions about the producer's future borrowing capacity or their borrowing bases. And generally, I guess the recent drop off in oil and gas prices, and then when I say recent, I'm talking fourth quarter. The results out of this survey is that it really hasn't rattled the lenders too much, which is, they're not seeing as a longer term trend. So I guess, let me see, specifically based on the poll, I guess most of the respondents are seeing their borrowing bases. They expect it to stay the same or just fall slightly in 2019.
Yeah, and we're just getting into that process now, and we've actually seen a couple companies, Ultra Petroleum being one, who went through that process just a little bit early and accelerated, and they got a reaffirmation of their borrowing base held flat. And so we're starting to actually see, these polling numbers actually come through in these redeterminations for the borrowing basis, which I think is positive for the companies.
Yeah. So for I don't want to say the uninitiated, but generally for as a generalist question, why the question might be, why is a resilient borrowing base important?
Yeah, I mean that becomes the liquidity in addition to the cash flow that you're generating to run your business. And so when borrowing bases decline, prices decline, there's an increased crunch on liquidity. And that can be troublesome for companies. And so, to have a healthy banking group or a healthy liquidity position certainly allows you to plan longer term. Exactly.
And so, also coming out of that is, this notion around sort of capital sourcing, where are producers planning to source their capital? So, as we talk about that, if the capital markets have become less important as a source for, I guess, oil and gas companies, we're seeing this is a downward trend from 2018. So I guess only on the survey, if we take a look at that, I guess 12% of the responses, only 12% indicated firms would issue either equity or debt to the capital markets, as opposed to like 20% in 2018.
Right.
So obviously they're not getting love from the capital markets, from the public markets.
From the public markets. And I think we'll get into this here in a little bit, but some of that equity may be able to be used in an M&A environment. I don't think those are getting picked up there. And so
okay, yeah.
Maybe there's seemingly a willingness, notwithstanding some of the recent pullbacks from specific deals, for other companies to take equity from other companies and get larger, which gets people closer to this free cash flow number. So size really matters in that free cash flow, and that's another source of capital, if you will.
Yeah, they talk about it in, specifically, cash from operations and JVs with private equity firms. They're seeing that as the trend in that survey result. And I guess one of the big questions on that survey was the impact of commodity prices and the impact of commodity price volatility in particular at the end of 2018. As we all know, there was this massive drop-off in pricing, certainly leading to a fairly, the most volatile quarter of 2018, certainly. So, how did that impact things? I kind of mentioned it before, but I guess most respondents generally did not expect another wave of bankruptcies, which is good.
Mm-hmm. And, we certainly saw, and you highlighted this really well in your Dallas presentation, this really kind of spike in volatility, one we hadn't seen since back in 2008, right?
Yeah.
But it was very quick. We saw an immediate response back, kind of in this January timeframe from the middle of December when prices started to come down, which I think people got comfort in that. And so I think the banks are looking at that in this survey and saying, all right, there's some stability here, but, we'll see.
So, I think that, timely and topical, I'd say, for anybody interested in this, you can go out to the Haynes and Boone website, and you can download it and take a look at it. It's interesting. as I mentioned of, they update it twice a year, so it's a good resource. So that's out there now. So I guess next on the list, anything that popped on up, I guess the only thing that I think you mentioned earlier was the news that came about from Denbury.
Right.
And just, for anybody listening, today is Friday, March 22, and so you see this news pop up yesterday.
Yeah, after the market closed, Denbury and PVA, who announced a merger later in 2018, decided to mutually go their separate ways and continue on a independent path. And I thought it was pretty telling to read the two news releases. Certainly had some similarities between them. They both mutually agreed. But Denbury kind of threw in this extra component of saying, hey, given the price downturn and instability, so they referenced some of that from December, and so stock prices come down, and our belief that certain PVA shareholders aren't going to vote with us enough to get this done, it's better that we just cut ties now instead of, wasting more capital. Was essentially the way that I read that.
Yeah, and it's, I guess, another example of companies now saying, yeah, maybe not.
Yeah, so I think that has been one of the offshoots of what we saw in that volatility in December. Leading into that, there were a number of corporate M&A deals that were announced. Some have gotten done, some we're kind of stepping back from. And, I think that it's also important to look at the activist investor as alive and well. And so some of the deals that got through, Resolute and Cimarex, I think had an activist investor that was really committed to moving Resolute along, and that one got done. Here, just the opposite. Some guys in the PVA shareholder camp said, hey, wait a minute, we may be able to do better here. And let's keep maybe moving this company along. And so the shareholders are making their voice heard.
And sometimes the activist can be within the very company you want to get in bed with.
Yeah, it's pretty interesting.
I joke because I'm thinking about, of course, EQT and Rice.
And Rice, right?
Yeah,
so yeah, that's a perfect example of, hey, we got together and now our activist shareholder is actually the other company that we bought.
Yeah.
And so, very, very active. I think, QEP Elliott is another one that I think is very interesting. Elliott.
I don't understand on Elliott. What's going on there?
I don't know. I think this is one to certainly keep watching. And so you have this known activist firm who came in and said, hey, we're going to take you guys private. Here's the dollar amount. Share price moved up to it. Market believed that this was going to happen. Yeah. And then they kind of stepped back and said, all right, hold on. We did a little cleaning house. We got some new management guys in here. But we're going to run the strategic alternatives process. And by the way, QEP, remember that Bakken deal you were selling to Vantage? Mm. Yeah, let's not do that yet. Let's put all of our options back on the table, because if I really take this thing private, maybe I want it or maybe someone else does. But if that ultimately goes into a take private situation, it could be really interesting to see what Elliott does and if there's other opportunities to put things together or whatever that may be.
Right.
But that's another one that's unique, interesting to watch.
So when you think about it, I guess I have to go back a little bit on the timing for Elliott and whatnot, but how much of this being a direct outcropping from the downturn in Q4?
Yeah, I think going back, it was a little bit leading up to that downturn. Certainly, QEP was
prior,
was going through this process, and Elliott was certainly chirping. It wasn't just like they started. And I think, if I remember correctly, or QEP was trying to really focus on their Permian assets.
Yeah.
Clean house, really get into this very focused asset class and where we're going to be putting capital, and that's why they got, you know, the Bakken deal, which actually people thought was pretty positive, on the table. And then I think as things started to fall away, the market pricing, Elliott kind of came in and said, all right, hold on a second. Let's I'll take this thing private. And then started even further solidifying and saying, hey, let's not sell this thing yet. There may be better days or some other option value for this.
The as I kind of taking a look through some of our notes, or we originally wanted to start off on this and say, hey, look, thematically, we wanted to talk about the state of capital, and we've kind of jumped right into it from timely and topical right into where we're at. And I guess if we're mentioning that Haynes and Boone survey, if as that survey kind of suggests, that the capital markets have become a less important source of funding for oil and gas companies, is cash from operations and JVs with private equity firms. Is that the answer these companies think it is? And
well, it's interesting. I was looking at a Tudor Pickering note the other morning, and they were mentioning in their universe, and they had done this study on at what size company and oil price do they need to be free cash flow positive.
Okay.
And so they were saying their large cap universe may be able to do it at low 50, and their small cap price and mid cap really kind of need this $60.
Right.
And so if free cash flow is going to be this mantra going forward, size also has to be considered.
Sure.
And so that naturally fuels some of this M&A, and I think that that's what you saw. Some of the deals, like Chesapeake's deal, really took this over-levered, highly levered name and put a growth asset with it. You got size out of it, and we got a healthier balance sheet. Those may be still on the table. They probably just have to get reset now. But I think we'll see more of that corporate M&A, some of these other cash flowing M&A, because the longer this goes on,
right,
the more size and scale these companies need to actually generate that free cash flow.
The within the public market sector in particular, I guess the big question being that I think that the industry is struggling with is this general question around: has the broad market abandoned energy? Especially when you have got these other alternatives out there from an investor standpoint, the FANGs of the world being Facebook and Amazon and Apple, Netflix and Google. So what can the industry do to sort of say, hey, we may not be, I don't want to say the most attractive girl at the dance, but certainly investors are looking at other sectors going, that's much more attractive than what energy's got. And so, if that is the case, what is the saving grace coming back for energy?
Yeah.
I don't know. Do you?
If I did, I'd probably make a lot of money. But I do think that it's time. And so it's not a matter of if, it's probably a matter of when energy stocks rebound.
Yeah.
And so we spent a lot of 2018 where oil prices actually recovered a fair amount.
Yep, agreed.
And stock prices did not. And so, we trailed the broad indexes, and, a lot of that has to do with the sentiment from investors.
Exactly.
And there's some other things that are out there that I want to...
They're just distrustful of energy, I think.
And I think the longer that goes on, someone's going to have to take the position of, hey, remember this energy stuff? That's still there. That hasn't gone away. And actually, it's healthier today than it was, a year ago, 2 years ago, or 5 years ago when it was $100 oil.
Right.
And, we have to continue to remind investors of this. And it tends to be a space when it comes back, it follows very quickly, but it's, time is kind of one of those things that I can't tell you when, but I can tell you that it probably is going to happen.
Yeah.
It's too big of an industry for it to be forgotten.
No, completely agree. And there's all sorts of things. Again, is what we see it here at EnerCom, as are very succinct in saying, EnerCom does sit at this intersection between the capital markets and the industry, and so we hear a lot and we see a lot. There's many aspects to that. Part of it is certainly the broader market, environment. There's also what companies can do to improve themselves and help their own messaging cause. But ultimately, that message has to, be propagated out in a way that makes sense, so that people are like, okay, I understand this better.
But it is pretty interesting, and we sit at this intersection as we talk about a lot. But just looking at conference numbers, so we host our Dallas conference and our Denver conference, and we can take a quick look at who's showing up. Who are the new investors showing up? We are seeing more generalists poking around the space. Now, have those dollars been committed yet? Don't know. That said, they're showing up, they're trying to learn. I think that's a positive. We've gotten more and more family offices, more and more private capital options that are coming in to kind of fill some of these spaces. And so that's a little different look and feel to this capital picture for all of these folks.
Let's talk about private equity just briefly.
Yeah.
Your sort of thoughts on private equity. I think there's certainly some concerns, but we can talk about that. But sort of the state of the market for PE. For
the PE, and I'll expand that to private capital, because I think the face of private capital is changing a little bit. And so, your traditional private equity model of this, 2 and 20, this large waterfall type idea. Well, the longer we're trying to play this free cash flow game, that is a hard one to do for private equity. So we're having to make adjustments on some of those return thoughts and thresholds. We've got some companies and LPs that are going direct sourcing to different capital.
Yeah.
And so that I think is a pretty interesting shift.
So groups like Fleur de Lis. Looking for direct investment.
Yep.
Yeah.
And institutions and family offices are willing to say, hey, if I won't bypass this middleman, and I can get comfortable with these companies and the way that they're putting capital to work, then I can put my money closer to the drill bit, which means that I can generate more of a return, even in this different type of cycle that we're kind of going through.
Right.
So I think that's something that we'll see a little bit more of.
So I kind of made this statement around, problems with private equity. I didn't mean to sort of, indict. I'm just thinking about it from an exits perspective, the challenges that we're seeing right now, and you're hearing about it even at like the private capital conferences.
Yep.
How do they handle some of these exits, especially now? It's problematic.
Yeah, so these natural exits, these IPOs are not really there. So Goodnight Midstream last week is a great example of two private equity firms that kind of came together and said, hey, I think we can add more capital and we can add some more horsepower. There's more things to do with this, but I can get it now out of one fund that I have in Tailwater Capital,
yeah.
and get it over here into TPG. We're still both working, and now we kind of have this new time horizon set, and the company's working well. And so I thought that was a really well done and collaborative example of how private equity firms are probably going to have to work better with each other also to get these natural exits and continue growth in a private world.
Yeah, it's and I didn't mean to imply it was gloom and doom. It's not. I think you're absolutely right. It's very cyclical, and we're, this too shall change.
Oh, so. Yeah. Well, and I think, the other things that the private capital side are doing is the resurgence of the drill co, where capital is coming in to say, hey, these companies may not have all the capital and resources to drill all of this development drilling, and so we're really taking the shift to development drilling. I can come in and help develop this specific asset with these specific dollars and generate a return, a healthy return, and everyone has a win-win set of outcomes. And so that those drill cos, I think, is another way that even the private equity space is getting into, instead of just funding direct management teams.
Yeah.
So I think there's some creativity there on the private equity side that I think will ultimately bode well for the firms.
Interesting. Okay. Well, any other thoughts on that we wanted to cover on capital?
No, I think those were the main things. I think I did want to go back on one other thing on the activist investor.
Oh, right.
Certainly we think about this activist investor and our feathers automatically get bristled a little bit. There's some things that the quote unquote activist investor may be doing well.
Sure. Okay.
And quietly moving along. And one of those is the corporate social responsibility. And so it's not one of those heavy hammers that investors are asking for, but they're using it, and I think getting feedback from their LPs to say, hey, we want to invest in companies that are sharing more information, being more transparent with their corporate social responsibilities. And so that's a big conversation in the boardroom right now. Mm-hmm. We're seeing a lot of companies come out with new information.
Yeah. Embracing,
and I think that will ultimately help in things like 181 potentially, or some of these other regulatory environments. Does it help the stock price? Not sure at this point. Although, the funds that are pushing for this are able to raise or differentiate themselves to raise more capital.
Yeah, if you
that they could ultimately put to work in these companies.
You have a mandate coming down from a group like BlackRock saying this has to be addressed before we even consider this an investment. That should make people pay attention.
People are going to pay attention, and so it's a big topic in the boardrooms. I think it's something that shouldn't be forgotten as we're starting to think about what information needs to be put out there so we can make good investment decisions. But that's one place on a softer side. The activist investor has made some real strides, and I would say in the industry as a whole collection.
Okay, I'm sorry. I was going to switch gears a little bit. I'm not a little bit. I was actually going to ask you a whole different question.
That's good, because I'm done with that one. I kind of I wanted to go back there because I didn't want to leave that out, because we're launching a new website today, High Point Resources.
Okay. Yep.
And so we got a new website up, but one of the interesting additions on that website is their corporate social responsibility.
Yeah.
And some of the reporting, and I think it's very well done. It's very genuine, but it's also one of those things that as we were thinking about what do we need to have out there.
Yeah, it certainly is important. And again, for any sort of listeners who aren't familiar with EnerCom, not only do we provide management consulting services to oil and gas, but it's across the board, not just communications. But we have a whole graphics and design team as well that works on everything from logo and brand up through corporate presentations and messaging, as well as Aaron just mentioned, websites and website design. So, we are seeing, I would submit, more and more of that interest in, hey, how can I fold this into my existing messaging? Mm-hmm. So,
and how does it fit? So, all right, switch gears.
Well, no, I was just going to mention that. I was going to say, look, we're kind of coming towards the end of March, sort of the wrapping up of earnings season. Any, from your perspective, highlights, takeaways, observations?
Yeah, so I would
it's a pretty
say
broad question.
It is, which is great, which means I can say anything and I can answer it. But to kind of come back to what we started off this podcast with, in the next few weeks we're going to see these borrowing-based redetermination announcements, and I think that'll be another marker in the industry for us to say, hey, capital is going to be there for these guys in the near term, and liquidity is going to be there. I believe that is the case. Everything's messaging that way. Haynes and Boone's report supports that. But we're going to get this next marker here in the next couple of weeks, and I think that'll be a big thing for folks. Reserves were up. So this was a year where companies were able to grow reserves, not only just cash flow and production in a measured manner, but reserves were up. And so I think that will also play into that reserve-based lending argument or case when the borrowing bases come out. But we're growing this industry even at a price that may not support rapid growth.
Gotcha.
And so I think that was one of the key takeaways that I kind of came away from.
So as you look forward then into Q2, Q3, anything that you want to prognosticate upon?
I'll throw this out there, and one of the really interesting things, and I think we touched on it last podcast, the pricing in the Permian and the differential has shrunk dramatically.
Right.
And I think it will be very interesting as we get closer to the end of 2019 when more infrastructure comes in place in the Permian. Right. I think we'll start to see those guys really step on the gas a little bit more.
Yeah. We're going to keep an eye on it, certainly. So
I wouldn't put too much stock in a lot of these guys saying, "Hey, we're going to be free cash flow positive. We're going to do all this." I would look to the Permian guys to step on the gas first, and then see how people react. From the investment community.
Fair enough. Okay. Any short-term thoughts? Because I'm heading someplace with this. I'm wrapping things up here with our observation around the NCAA tournament that's kicked off. So I'm switching gears in that we've got, so I don't know if you're familiar, if you saw Rick. Rick is one of our analysts. He's one of these whip-smart Colorado School of Mines guys, and he's got his bracket already done, and it's already kicked off, right?
It's on Bloomberg, so it's under EnerCom. We've entrusted him to, because I'm sure he's got a spreadsheet for all of it.
Well, that's just it. These guys, especially, and nothing against School of Mines, it's just my experience with these School of Mines guys is they're never ones to do something relatively, on a gut feel or instinct when there's a ridiculously complicated and amazingly complex spreadsheet that can be done instead and apply it towards your thesis. And Rick's got this all figured out, and he's going up against all the other analysts that he can to represent, well, himself initially, but now I've absconded with that and said, "You're representing EnerCom, buddy, so don't blow it." Of course, Marquette loses.
There's always going to be an upset.
I know. Murray State busted up Marquette. And frankly, it wasn't all of Murray State. It was just that one player, Morant, I believe. So, and then, of course, Michigan State did its best to lose in this first round, but eventually they just stopped the Braves. And that almost ruined his bracket. So anyway, we're going to keep an eye on that one as well. Hopefully by next week or 10 days from now, or not hopefully, we are going to know.
We are going to know, and then it's opening day at the Rockies.
And yes, and I'm actually really looking forward to that one as well. It's opening day. Okay, that's all I've got. Was there anything else that we wanted to touch base on? I know I've kind of traversed. I know we've got a couple of questions that are in the OG Podcast mailbox, which is ogpodcast@enercominc.com. I don't have it in front of me. I don't, so I'm not, we'll just let that flow over into next week unless there's anything in particular that we want to grab from there. But if anybody does have a question, please feel free to submit it, and hopefully we'll allocate ourselves a little more time next time.
Yeah.
Okay. Thank you, everyone. Appreciate you listening in, and until next time, this is Glen Parrott and Aaron Vandeford from EnerCom. Thank you very much. Bye now.